I would like to start by noting that this month marks the 25th anniversary of First Solar's founding, making us one of the oldest and most experienced solar module manufacturers in the world. Over the past year, we expanded manufacturing capacity, mobilized at our latest announced facility in Louisiana, produced and shipped a record volume of modules, expanded our contracted backlog to historic levels, and increased R&D investment, and continued to evolve our technology and product roadmap. We continue to see strong mid to long-term demand, especially in the United States, as shown with 2.3 gigawatts of net bookings since the previous earnings call at an ASP of 31.8 cents per watt, excluding adjusters. Our total contracted backlog now stands at 80.1 gigawatts, with orders stretching to the end of this decade. From a manufacturing perspective, we produced a record 12.1 gigawatts in 2023, representing a 33% increase in production over 2022. In addition, we successfully completed our manufacturing readiness trial under our CURE program in the fourth quarter of 2023, and expect to begin manufacturing modules powered by this technology at our lead line in Perrysburg in the fourth quarter of 2024. We began 2024 with a total contracted backlog of 78.3 gigawatts with an aggregate value of $23.3 billion, or approximately 29.8 cents per watt. Since the end of 2023, we have entered into an additional 1.8 gigawatts of contracts, resulting in a total backlog of 80.1 gigawatts. The continuation of Chinese subsidization and dumping practices has caused a significant collapse in cell and module pricing. Despite the current oversupply of Chinese modules and loopholes in trade policies in our key markets, our pipeline of potential bookings remain robust. Total bookings opportunity stands at 66.5 gigawatts, an increase of approximately 600 megawatts since the previous quarter. We expect to exit 2024 with over 21 gigawatts of global nameplate capacity, approximately half of which is forecasted to be local in the U.S. Our new Louisiana facility is also on track and is expected to commence commercial operations in late 2025.
Based on our vertically integrated differentiated manufacturing model and the current form factor of our modules, we expect to qualify for Section 45X tax credits of approximately 17 cents per watt for each module produced in the U.S. and sold to a third party, which is recognized as a reduction to cost of sales in the period of sale. In December, we entered into an agreement with Fiserv, which resulted in the sale of approximately $687 million of 2023 Section 45X tax credits for expected aggregate cash proceeds of $659 million. We received an initial $336 million of cash proceeds in January, with the remainder expected by the end of April 2024. In connection with this transaction, we recognized a valuation adjustment of $28 million within cost of sales during the fourth quarter to reduce the carrying value of the credits to the amount expected to be received from the transaction. In the fourth quarter, we took a $23 million impairment associated with a strategic investment in Cubic PV. As of December 31, 2023, approximately 95% of the megawatts in our backlog had some form of freight protection, and approximately 85% had some form of steel and/or aluminum commodity cost protection. As we continue our capacity growth, we expect to continue to see operating margin expansion in 2024, as reflected in our guidance provided today. Our current backlog, cumulatively oversold through 2026, and with bookings extending to the end of the decade, provides us optionality in periods of pricing and policy uncertainty. Put simply, if we did not book any more deals by the end of this year, we would remain sold out 2 years forward through 2025 and 2026.
Separating the U.S. from India, you're going to continue to see bookings in India. Clearly, as we indicated, we've got a conversion that will happen of those contracted subject to CP, so that's going to continue on a cadence that you would expect, call it hundreds of megawatts, maybe a gigawatt on any particular quarter. As it relates to the U.S., I'm very happy with the bookings that we showed up with this last quarter. Great ASPs, good counterparties, technology adders associated with it, and feathered into a period of time that's very constructive for us. A lot of that volume goes out into 27, 28, and 29, and touches 30 even. I've got ongoing commercial conversations right now for north of 3 gigawatts of bookings here for shipments into the U.S. And actually, as this call was ongoing, I got a text that about 10% of that now has been booked and will reflect it in the next earnings call. As it relates to pricing and ASP and momentum, policy is clearly toggles back and forth and trends up and down, And right now, I think there is a lot of uncertainty from that standpoint. But the other thing I want to continue to try to emphasize is the value of certainty of First Solar and the value of our relationship and our value proposition. I was having a conversation with one of our largest partners just last week, and our partner said basically, look, I know I may have to pay a little bit more for First Solar, but when I look at the brand and the certainty and the value proposition that they're creating, more than happy to do that. And I don't see this as a unique one-off. This is generally the engagement and conversations that we're having with our customers.